I dabbled in crypto for a while. I did it for about a 3-year stint, and I lost money on it. So I quit because I was trying to dollar cost average into it to see if that would work. And it was just the thing that bothered me
Yeah, but you
about
did the
Bitcoin.
exact same problem like the other guy you were telling about, and then 4 years
I know.
later,
And
you're
then
like,
got
oh
out of
man,
it.
I
But
should
let me defend my position. And I will admit, I was exactly, if I'd have stayed the course, I'd have done okay. But what I didn't like about it, Graham, was the daily volatility. It didn't feel like an investment. It felt like a speculative play based upon how much play was every day. I mean, when you have 4, 6, 8%, every day on your trading, that's weird to me. I mean, it feels like the market swings, and we still, like right now, I'm barely keeping up with Bitcoin anymore because when I gave off, and the other thing that scared me off from it was when the government put that line across the top of your 1040 and made you basically, yes, no, are you dabbling with cryptocurrencies? I felt like they were setting a trap to a degree because a lot of people are out there marketing, hey, this is outside of the government. You don't have to do it. And I'm like, no, taxation's not outside the government. And if you're not checking that box, yes, you don't think Coinbase, or even if you're putting this stuff in vaults and stuff, there's things, I don't know if you're keeping up with some of the geopolitical stuff. They just had a big announcement that a lot of the Iranian Bitcoin and stuff has been frozen. How do they know about it? When we had all the protests up in Canada, they froze all the Bitcoin of those trucks. How do they? That's what you're told these things about, and I just don't think it's as disconnected as everybody thinks it is. And I worry the volatility makes it feel more like a speculative play than an investment. And I'm more into the investment emotionally. Maybe it's because I come from an accounting background. I don't get my highs from riding the speculation.
What price did you sell Bitcoin for?
I mean, it was probably in the mid 30s. It was in the mid 30s. It's around 35,000 probably.
So you would have doubled.
Yeah, I would have doubled from here. I would have. But
How do you say
but I
that's
have no
okay?
regret.
You would have done okay.
I would have done
You would
okay.
have doubled.
I mean, but realistically, I could have tripled. But now I'd have been back to double only in because we went up to 100. We went up to 100. How high did we go? 120?
125.
Yeah, 125. So, I mean, but look how crazy that ride is. I mean, I would be, because the other thing is, I already told you the Apple story. I mean, I still kick myself on that one because emotionally, I started getting reactions. Now, look, as a percentage of my assets, it wasn't even a rounding error of 1/10%, but yet I was mad that that it was down. And it's the Apple. I mean, I should have held on, but you don't know. And that's why probably the craziest thing I have now is I do have close to 7 figures in one stock, and I've just told myself I'm going to ride or die with
What
it.
stock is it?
Well, should I say?
Yeah.
Should I say what it is? Is it okay to say?
I think you can say, because you've owned it for a long time.
Okay. In 2018, I got my first Tesla. I got the Model 3. I got the Model 3.
I knew it was Tesla.
I got the Model 3 in 2018, and I had one of the early versions. It was because I remember I'd ride by the coffee and cars, like where all the exotics were here in town, because there's a lot of fancy cars here. And I watched all these people with their Lamborghinis, right? Because the Model 3, when it first came on the scene, people were like really excited. Now we see them everywhere. I mean, I can walk outdoor and probably we can throw a rock at 12 of them. But when they came on the scene, and this is the first time I drove a car that people were like ripping their necks trying to look at you, and everywhere you pulled up, people would want to talk to you about it. So I was like, holy cow, this thing is pretty magical. So I put $25,000 into Tesla back at the beginning of 2018. You can imagine it's done pretty well.
So you're at close to 7 figures now.
Yeah.
Now, if you sold some
I'm not
covered
gonna sell
calls
it.
on it,
Oh, I'm
it
not
seems like
gonna
you're a
sell it.
little overweight in
Hey,
that
can I tell you
stock.
another thing
You
I
can
am
make
excited about?
3%
It's in a Roth IRA too.
Is it
No.
actually?
It's in a
way.
Roth IRA.
Yeah.
So I feel
So that's
like I have
the best
totally,
investment you've ever done.
It's pretty good. No, the best investment is hiring Bo.
There we go.
I hired Bo
There
in
we go.
2008. That was probably the best. But yes, from a individual stock, it's been the best investment.
Incredible.
And I've just decided I'm going to ride or die with it at this point.
There's no plan. There's no goal. It's not if it hits this amount, you're going to do something.
No.
It's just like money for the sake of money.
Because even though that is at that level, it still as a percentage of my holdings is just it's not enough to move the needle.
And so for you don't have a story like that.
Well, I have one similar, but it's not as exciting. I also own Tesla stock. Mine's not quite 7 figures. But I was going to mine was a content play. When they very, very first announced the Cybertruck, I knew how much Brian loved his Tesla. I'd ridden it a bunch. And I was like, oh, you know what I'm going to do? I'm going to see if I can create some content. So when they announced it, I started just dollar cost averaging, buying a couple $1,000s of Tesla every single month, right? And my plan was by the time the Cybertruck actually came out, I was going to create some content around this is how Tesla paid for half my Cybertruck or whatever the thing was. Well, it ended up coming out, and it was not as like interesting or exciting to me, so I decided not.
We decided we're not Cybertruck type.
Yeah, I was like, I'm not really, but I was like, well, okay, I've got all the stock, and it did what I thought it would do. It was certainly more than enough to buy the truck. I was like, but I'm going to hold on to it for some of the same reasons Brian said. I'm like, I've got it. I don't really want to pay the taxes. I don't want to trigger the gains, so I'm just going to kind of consider that a lifetime holding. So that's, I guess, technically that's my riskiest investment.
My wife forbid me from buying the Cybertruck. She thought it was so ugly. I couldn't do it.
And what's the most that both of you have lost on an investment? Because it was a speculative play.
I mean, that Tesla's been all over the place. But
you
I haven't lost.
That's
I
not
didn't lose.
You've made a ton of money off of it.
Right.
What have you lost money on?
We did options for a while. This was not a ton of money, but it was a great learning experience. We did some option strategies way early, back when I got the CFA, very early on. This was like,
we were like, let's flex the muscle on
in
this
the early
investment.
2010s. I thought I had the market figured out, so I came up with some option strategies we could deploy. I was the strategist. Brian was the capital back then, and so we doubled in like a month and a half. We thought we were geniuses. The worst thing that happened with a strategy is you actually hit it the first time. So we turned 5,000 into 10,000 like in a month, and we were like, we are genius. We're like, Bo, we're gonna be so rich. And so then I was like, hey, you know what? Okay, this was good. I have another idea, and I came up with another idea. And this is what's so frustrating. We were going to buy some long calls, and then we're going to buy some puts on.
Well, we can say it's probably because it's kind of fun to think about as Netflix.
Yeah, we were.
Wow!
So we bought calls on Apple because we were bullish Apple,
and we
bought puts on Netflix because we thought Netflix was overvalued. Right?
And it was. We were right.
And here's what's wild.
But this is why you have to be worried about the time degradation. I think it's a real thing.
That's why you sell them.
It was like 6-9 months, something like that. And I think Netflix was trading at like 300 or something at that point in time. And the time ended up running out. Options ended up expiring, worthless because, it never. And I kid you not, it was like less than 6 months later.
I think it was less than 2 months.
2 months later, it dropped down like
stock lost like 30 or 40%.
$70 or $80 a share.
It was a huge drop. We would have made a fortune
if we would have been 2 months.
But we realized that you can be right on a trade and still not make a dime because the time element of doing contracts, it can hurt you because you can be spot on, but markets aren't efficient in the short term. So they're very inefficient on the short term. You can be spot on that something is overvalued, it's a bubble, or whatever the case may be. Now, look, Netflix turned out to be a great company in the long term. That's one more, cap, feather in the cap for being a long-term investor is that even if you would have ridden that stock down the 40% where we were right on the overvaluation, they caught their stride and went right back up because they were still, there's been frothiness. Mm-hmm. All companies deal with that. And that's why I like being a long-term holder. But that's why the lesson I took away from that is as an investor now, since that point until now, I have a really hard time betting when there's a time constraint. If I'm going to buy something or invest in something, I want to be okay. This is a Warren Buffett mantra again, being a lifetime holder of that thing. If I buy this, I don't care what it does this week, this month, this quarter, this year, this decade, I'm going to be okay holding it long-term. That's why most all bets, even if I was going to do some sort of option thing, I want to be long. I want to be bullish on whatever that is because it's just so hard to get the timing right when it comes to investing. The market has a way, at least in my experience, of making us all, even the smart ones, look like fools.
Now, really quick, every business is asking themselves the same question. How do we make AI work for us? The possibilities are limitless, but guessing is too risky, and sitting on the sidelines is not an option because one thing is certain. If you're not doing it, your competitors are already making their move.
And that's where our sponsor NetSuite by Oracle comes in. It's the #1 AI cloud ERP, trusted by over 43,000 businesses to manage everything from financials and inventory to commerce, HR, and CRM, all in one unified system.
When all of your data is in one place, your AI becomes a lot smarter. It doesn't just guess. It knows. NetSuite intelligently automates routine tasks, delivers real-time insights, and helps you make fast, confident decisions that actually help drive growth.
And it's not just an add-on, it's AI that's literally built right into the system that runs your business, helping you cut costs, improve accuracy, and stay ahead of the competition.
Whether your company is making millions or even hundreds of millions, NetSuite gives you visibility and control to keep moving forward. Honestly, if I were building a business of this size, NetSuite's the only company that I have 100% confidence in.
So if your revenues are at least in the 7 figures, get our completely free business guide, Demystifying AI, at netsuite.com/clips.
Again, the guide is free for you at netsuite.com/clips, netsuite.com/clips with the link down below in the description.